Hello everyone, welcome once again. This is Sudhi from CoinGabbar, and we are here to interview Cristian, who is, having a lending protocol that is a project. So as we move ahead of the interview, we'll be understanding more about how this protocol is different from others and how things are moving in the industry. But first thing that I would like to understand is that Bitcoin going above 100K. How does that affect the industry?
Absolutely. Look, I think right now, I wasn't surprised to see it push down over the weekend. Seems to coincide with a bit of a downward trend. I think it's come back a little bit. Yeah. I think it's going to gravitate to 120 and it won't be long before it hits 150. So I'm very excited about the future.
I'm in a candid question. As a Bitcoin enthusiast, when will it hit 1 million as per you?
I'll be long gone before it hits a million. I'm in my twilight years. Look, if it hits a million, look, realistically, could it do it in 5 years? Yeah, I think it can.
5 years, yes. That's realistic assumption.
That's fair.
Because, with adoption coming on the BTC chain as such, with ordinals coming into picture, a lot of VCs focusing. I was just interviewing another VC and Khushbu Khullar, and she said that we are particularly bullish on Bitcoin-based projects. Not even ordinals, only Bitcoin. So if it is Bitcoin, they're okay with it. That's how things are moving. So, everybody's bullish on Bitcoin. That is what we say. So, if we talk about the evolution of industry over the period of time, and say just holding of assets is not enough, like money in a safe is not money. It is declining in value, it is not growing. Same thing happens with crypto assets. It is lying in a cold wallet, crypto assets is of no good use. So you need an increment in the value. That's where lending protocols come into picture. But if I understand, what have you been doing in your past life and how did the idea of lending protocol come into picture?
Yeah, look, it's a really good question. My past life, look, I was a partner in a fairly large international accounting firm. And so I have
makes the two of us. So in my past life, I am like a partner with one of the top 50 accounting and auditing firms of India. And that's where we come from. We are from the same root.
Yeah. So I had that background. Bit of a sad story, but my father was really ill. And where I lived in Australia is an area called Sunshine Coast. I used to commute to Brisbane, which meant that I was there for the week and then I'd come back on the weekends. With my father not being well, I thought, look, I want to look after Dad in his final years. I'll bring him home, basically retire from the practice. And they were very happy to support me. 2 weeks later, COVID hits, and I'm thinking,
and you're home for good.
Yeah, I'm home anyway. But the reality is I always had interest in crypto, but now it was full time. But the issue for me at the time was, hey, I love this and I love holding and acquiring, but I want to extract value, but I don't want to sell. The last thing I want to do is to sell. Actually, one of the examples that I gave at a presentation is a really good friend of mine who, she had 5 Bitcoin. She needed to pay off a car loan. She sold the 5 Bitcoin, paid off the car loan, which was, I think, $5,000 at the time. And she was over the moon because she's been able to do that. But that one decision alone cost her over $1 million in today's terms. So it's...
One thing I must say is that, except for the OGs, who have held it since the ages, everybody has sold Bitcoin in like a 25-30% gap. So one who was acquired at 1,000 sold it at 1,300. One who was acquired at 5,000 sold it at 6,000. One who was acquired at like 10,000 sold it for 13,000-14,000. So there are very few handful of people in the world who have held it since the beginning of time and they are still holding on to it. So that is an investor's mindset. If I'm getting like 30-40% of the return, I'll definitely sell it.
I'd argue that it's a trader's mindset. It's not an investor's mind. Exactly. An investor's mindset should be hold and look, you never sell an appreciating asset. You never sell it. So it's no different to acquiring a home or a property. You kind of always have the expectation it's going to go up in value. And in future, if you want to extract value, you borrow against your home. Look, that system's been around forever. Elon Musk, do you think he sells his Tesla shares? No, he borrows against them. And so it's no different to this environment for crypto. But unfortunately, I think crypto has this habit of being seen as a trader's environment. You've got to buy low, sell high, watch those charts like that's some sort of religion. And if you're not following the chart and following the trend, and it's a nonsense. There are assets that are meant to be held. Bitcoin is a classic example. And just borrow against it.
If you have, people say if you have stock of Coke, Pepsi, like 51% I think is held by Warren Buffett, Berkshire Hathaway, and he's never sold it.
That's true.
So Bitcoin is one of those assets which you never would like to sell. But talking about lending protocols, and how did you arrive into the Bitcoin?
Good question. So we initially launched on Pulse Chain, and the reason we did that was that we were part of that community, and we were investing in Pulse Chain. And I said to my business partner Dave, I said, Dave, I never want to sell, but there's no lending protocol. Let's build something, and we're able to build something that is kind of unique for that chain, but it's also, I think, we're looking to launch on other chains. But fundamentally, it's completely decentralized. So there's no central party. So it's a little bit like Aave, except there's no interest payment. So it's 0% interest. There is a fee up front. There's 0.5 that you actually, of whatever the amount that you're borrowing, that's your only fee. So there's no repayment schedule. There's no interest accruing. All you need to worry about is to make sure that the value of the collateral that you've put up is more than the loan that you've actually acquired. If you're doing that, managing your position, it's fantastic.
So just asking from a trader's perspective, if let's say I have 10 Bitcoin, if I come onto your protocol, I buy, let's say 8 Bitcoin worth of value, buy 8 Bitcoins from the market, stake it again, buy like 6 Bitcoin worth of value, but then lend it again. I mean, put it at staking again.
You can re-hypothesize.
Yes, and I multiply my asset value. For how much of sensitivity would you, as a seasoned investor, advise that let's say 10%, 20%, 30%, how much of sensitivity value should I take before I can actually go for, I can hit a liquidation wall?
Yeah, so one of the protocol has a limit of 110% minimum. So if you go down to 110%, somebody else can liquidate your position, or the system will actually liquidate your position. Personally, I wouldn't recommend anything under 200% because the markets fluctuate. So if the price of an asset drops, your collateral ratio also changes. So you have to monitor it. If you want to set and forget, you set your collateral ratio really high, so you're not having to worry anytime the market fluctuates. So there's plenty of people that have 500% collateral ratios, but they're extracting value and they're doing exactly what they'd like to do, and they don't ever feel that risk of being liquidated or being redeemed against.
So, what I've seen is that people, whenever Bitcoin goes up, or whenever any crypto asset goes up, people become super bullish, they leverage their positions, they take higher leverage. Most of the times play counterintuitive.
Exactly.
And that's when the value will start to decline because everybody is now holding position and staking. So that becomes, and people, one more thing I must say, is that people say this is a trader's market, but I must say not even 10% of the assets are traded on a daily basis. 90% of the assets are held, locked up in wallets, and 10% are being traded and they are determining the value. So, this market is very tricky, I must say. 10% is determining the fate of 90%.
I think it actually undermines crypto in general. So that whole buy low, sell high mentality, and unfortunately, a lot of influencers subscribe to that mentality. They still think, hey, if you've made a gain, exit out, take your gain, like the whole, hey, if you double your money, take your money off the table and everything's a free run. Well, it's a free run except that you've just lost half the values. Well, it's just a nonsense. So for me, I think that mentality has to change. I think it will change in time. And to be honest, I also think there is a specific group or demographic that I believe have not really invested too much in crypto. And unfortunately, that's my demographic, right? So you've got the older crowd that actually has significant wealth are very gunning. They're not. They're very gun shy. They're not interested in crypto because they see it as such a speculative environment. And let's face it, for the majority of people in crypto, or maybe that 10% you mentioned, their thought process is buy low, sell high, get rich quick. And that's not the way to.
Quick is the name of the game.
Exactly.
So coming to your project, please introduce your project to us. How does it differ from the others in the market?
Yeah. So I think the biggest difference, I believe, is it's completely decentralized. So we've launched on Pulse Chain. We're about to launch on Base. So fundamentally, where it's different is 0% interest. So there's no interest repayment. There's a fee up front. And the other thing is it's a timeless repayment schedule. So you don't ever have to be locked into, I've got to make a monthly payment. So whilst there's other lending platforms out there, they all charge interest. And more importantly, their collateral ratios are very high. So they're not very efficient with the actual amounts that you're borrowing. Given that we're launching on Base, the underlying asset on the Base layer 2 is Ethereum. So anyone that holds Ethereum that wants to extract value, they can do that. And the other thing is, whilst it's a secondary thing, if you borrow USDL, which is the stablecoin, you can also stake your USDL. You can provide support to the actual protocol itself and earn a yield, or you can actually park it in a liquidity pool and earn extra yields there. So there's many ways to make money off the stablecoin itself. Right? Not the collateral, but the stablecoin. So look, we're really excited about launching on Base. I think that to us, the biggest challenge in this environment is really changing the mindset. You only really make long-term wealth by holding and being smart. Don't sell the underlying asset.
Right. What all assets are you supporting?
Predominantly, it's going to be Ethereum, Pulse Chain. We're looking at other chains. I'd love to have a direct solution for Bitcoin. If we were to do something for Bitcoin, I'd rather do it natively, as if we can do that with one of their side chains rather than wrapped a version of Bitcoin. Because as soon as you wrap something, you're introducing potential counterparty risks.
Any plans to get for ordinals, Lightning, something like?
Yeah, I think that's the next opportunity. I think if we're able to provide something that people feel really comfortable with, that there is no counterparty risk for Bitcoin, the sky's the limit. I think it'll be fantastic.
Just one question. I mean, having been in the accounting side of things and having been in crypto for quite some time, I have this question. How long do you think will it take for, say, a proper adoption, change in the mindset, when people start considering crypto to be a real worthy asset than a scam?
I believe what's going to help that happen, stablecoins is the first starting point, right? So even though we've got significant centralized stablecoins, people being able to use their phone to make payments and not realizing that they're actually on a blockchain. Now here's an example which is a lot of people don't realize. Do you know the country that's leading in blockchain technology to facilitate payments on chain? You'll never guess. It's in the Asia region, a very inverted small country in the Asia region. Have a guess. Singapore? Cambodia.
Oh,
Cambodia.
it's leading.
Cambodia is leading the way, and their system. And here's the funny thing: whilst it is, it's a control blockchain, but it's a blockchain.
It's a blockchain,
and they allow transactions for their local currency, which is the real, as well as US dollar. And initially everyone was concerned that, oh my goodness, if they're going to do this, no one wants to hold the local currency. Well, it's turned out the other way. People are really comfortable now with the local currency, and the local currency is quite stable because they've got this system on. Look, it is a controlled blockchain, but it's working. And small merchants that sell you coconut juice on the side of the road have a little QR code that you scan and you send.
I must say, if you've never been to India, I'm sure this is already there.
Yeah.
With a government regulated organization called the UPI, and it is always you are giving like about 10 cents or 3 cents in UPI payments without any fees. So I mean, we are already accustomed to that system. If it shifts to blockchain in the back ends, no one's going to know. And so there's the overriding. Let's get past the adoption thing. If people have apps on a phone, they're not going to be concerned about, is this on the blockchain? On or off blockchain, right?
It's just, I've got this asset, I'd like to borrow against it. The system allows me to do that, and I can still pay for my coconuts on the side of the road with the QR code. That's a cigar account.
And just a wild thought. How far do you think CBDC is going to play a role in the adoption? I mean, that's a buzzword. That has been the buzzword like a year back from now, but it has phased out. Most of the government tried and it phased out.
Look, countries that have embarked on that particular direction have been hit with a lot of resistance. I mean, China, for example, have tried that, but it's not working. I think stable coins are going to pave the way. The challenge really at a very high level is for other jurisdictions that don't care to have US dollars. So for example, South America, some of the South American countries, people love the US dollar because it gives them stability. So they're able to transact there.
Argentina especially, hyperinflation, it has seen like times.
So why wouldn't you do that? You'd love the US dollar. But then you go to more stable currencies, and the concern there is capital flight from the country. So how does the government manage capital flight when it's on the blockchain and people are using USDL or USDT or what have you? They don't. USDT and USDC, potentially they have some way of controlling that. there is an opportunity for them to regulate.
And you can have your currency in USDC or USDT, which is kept in the US.
Yeah.
Maybe with the treasuries of the
Treasury bonds.
T or C, we call it.
Yeah, so they're very happy to see USDT flourish because they're buying more treasury bonds, right? So the US continues selling debt whilst other countries.
We know the US model of dollar funding.
Yeah.
Everybody knows it. But I mean, any specific point that you would like to highlight about your protocol? I mean, that's something that people should look forward to apart from interest, apart from the upfront fees. Anything else that we have missed asking you?
Yeah, I think that the opportunity to generate yield using the stablecoin on the protocol is exceptional. And when we launch on Base, it's always good to be early. So people that are early, that are actually staking their stablecoin on the system, are going to be rewarded handsomely. So that's what I'd be suggesting. Look out for our launch on Base and be early. But learn about the protocol. It's already on another chain, Pulse chain. But learn about it and then get a sense of how you might be able to use it.
So guys, this was Cristian, and he's having a lending protocol. You should better check the platform because this seems to be having some interesting features not found with other protocols and other lending platforms. And one more thing that is important is things are going absolutely crazy at Singapore with Token2049. And we'll keep coming back to you with more such interesting perspectives and interviews of the legends in the industry. Cristian being one from the Web2 ecosystem and the banking and audit ecosystem like I have been, and it has been a very interesting talk with him. As of now, this is Sudeep signing off from Conference X. Thank you so much. Bye-bye.